Today, we're pulling back the curtain on a hidden battle. It's a fight being waged right now over your digital wallet. On one side, you've got this incredible convenience, and on the other, well, you've got some seriously sophisticated crime. And how this all shakes out is going to define the future of money as we know it. So, let's jump in.
You know, it's such a simple but powerful idea, right? But for hundreds of millions of people around the globe, especially where traditional banks are just not an option, this isn't some far-off dream. It's their daily reality. And this is the vision that's fueling one of the biggest financial shifts of our time, the rise of mobile money.
And I'm not exaggerating when I say it's a revolution. I mean, we're talking about a technology that is completely leapfrogging old-school banking infrastructure. It's putting financial services directly into the pockets of people who've never, ever had a bank account before. And the scale of this change, it's just mind-blowing.
Just get a load of this number. By the end of 2018, there were 395 million registered mobile money accounts in sub-Saharan Africa alone. That's more than the entire population of the United States. So yeah, this isn't some niche little product. This is a mainstream financial tool for millions.
And all those accounts, they're moving a phenomenal amount of money, over $300 billion in a single year. But you've got to understand, this isn't just a number on a screen. It's a lifeline. It's a daughter sending a little money home to her parents. It's a small shopkeeper paying for new stock. It's an entrepreneur building a business from scratch, all of it powered by the phone they hold in their hand.
So, how does this all work? Well, at its heart, the system is beautifully simple. With a wallet-to-wallet transfer, you can send e-money directly to someone else's phone. It's instant, it's secure, and you never have to step foot in a bank. It's basically the digital version of handing someone cash.
Okay, but what if you don't have an account? Or maybe not even a smartphone? The system is designed for that too. Through something called an over-the-counter or OTC transaction, you can go to a local agent with cash and they'll send the e-money for you. Then the person on the other end just goes to their local agent and picks up the cash. This inclusivity, it's a huge reason the whole thing works.
And here's one more really clever piece of the puzzle that connects the old and new worlds. You can walk up to an agent with cash and have them deposit that money directly into someone else's digital wallet. It's a crucial bridge between the massive cash-based economy and the new digital one.
But here's the thing about revolutions. They always have a dark side. The very things that make mobile money so powerful, how fast it is, how easy it is to access, how far it can reach, also make it a perfect target for people who want to exploit it.
And this, right here, is the central problem we all have to face. When you build a system that can move hundreds of billions of dollars this easily, it doesn't just become a tool for helping people. It becomes a potential superhighway for crime.
And the list of how it's being abused is, well, it's pretty chilling. An Interpol report laid it all out. Organized crime is weaponizing mobile money. They're using it to launder dirty cash, to pay human traffickers, to extort people, and even to fund illegal trade in things like firearms and wildlife. The system's convenience becomes the perfect cover for all their dirty work.
And the criminals are getting way more creative. We're not just talking about stealing someone's ID anymore. Now they're creating what's called a synthetic identity. It's a completely fake person who doesn't exist in the real world. They literally stitch together this digital Frankenstein's monster using a mix of real, stolen data and totally fabricated info, all to trick the financial system.
So, in response to all of this, governments and banks are scrambling to build up their defenses. They're trying to construct these digital walls, this whole framework of rules and regulations, to make it a much, much tougher world for criminals to operate in.
And the defense really comes down to two key pillars, KYC and AML. The easiest way to think about it is like this. KYC, or Know Your Customer, asks, who are you? It's all about proving your identity before you can even get in the door. Then you have AML, or Anti-Money Laundering, which asks, okay, what are you doing? That's all about watching transactions for anything that looks suspicious. So one's the gatekeeper and the other's the guard on the wall.
And trust me, these rules have real teeth. Just look at what happens when a customer reports fraud. The clock starts ticking instantly. Within 30 minutes, the complaint is raised across the system, and within another 30 minutes, the bank on the other end has to block those funds. It's all about speed, about cutting the criminals off before they have a chance to cash out.
But here's the twist. Building these digital walls higher and stronger, it comes at a cost. And sometimes, the very protections designed to keep the bad guys out can end up hurting the exact people the system was meant to help in the first place.
This quote from the World Bank just nails the problem.
You have to stop the crime, obviously, but without stopping the progress. It's an incredibly delicate balancing act, a digital tightrope. Because if you make the rules too strict, people might just give up on the formal system altogether. And that brings us to what you could call the paradox of protection. Think about it. Let's say you're a farmer in a tiny village with no formal street names, or a migrant worker who moves around for jobs. A simple rule that requires a formal proof of address to open an account, a rule that makes perfect sense to stop criminals, suddenly becomes a giant wall for you. The safeguard becomes the obstacle.
And what's really concerning is that this problem often just flies under the radar. According to a World Bank analysis, in countries where a pretty significant chunk of the population is excluded, more than half of the official regulatory reports don't even mention it as a risk. It's like they only really start to worry about it when the problem becomes extreme.
So, where is all this headed? Well, it looks like we're entering a totally new phase of this fight. It's a technological arms race, and the weapon of choice is artificial intelligence. AI is becoming the ultimate tool for fraudsters, and at the same time, the most powerful shield our banks have ever had. So on one side, you've got criminals using AI to create malicious software that can actually learn and adapt to avoid getting caught. But on the other side, banks are using AI to create what's basically a digital fingerprint for every customer. The system learns your unique rhythm, how fast you type, the way you move your mouse, even the angle you hold your phone. It builds a profile that is almost impossible for a fraudster to copy.
And as fraud expert Adam Perry says, AI is basically pouring gasoline on the fire of those synthetic Frankenstein IDs we talked about. It's making these fakes so much more realistic and harder to detect than ever before. It's a massive, massive challenge for the entire financial industry.
Which leaves us with one last kind of wild question to think about. We're walking this tightrope between easy access and rock-solid security. And as we move forward, the safety of our digital money might just depend on an AI that analyzes our every tap and swipe, an artificial intelligence that knows our digital habits even better than we do. What does that future really look like? That's the question we're all going to have to answer. Thanks for watching.